What's up traders, it's Nick here and welcome to another breakdown. As usual, I will be keeping it as educational as possible. So without further ado, let the intro roll and I will see you on the charts. The pair that I want to speak about into this video is AUD-JPY. Now, why do I want to speak about AUD-JPY? Because this pair is very near to providing to us a good trading opportunity. So obviously, I want to give you exactly a full breakdown of the situation that we have on it to show you where we can be looking for two quite good trading opportunities. Now, obviously, I will first be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are doing in the market. And obviously, if you're able to follow what the biggest banks and institutions are doing in the market, you do have an advantage over your competition. And by the end of the video, by using the combination of our technical and our order flow analysis, we will be able to understand where we can be finding the highest probability opportunity on the pair. Starting here from the monthly time frame, what do we have? Now here in the monthly, we have a market which has just provided a nice impulse correction and impulse pattern to the upside. Now, generally speaking, after the creation of an impulse correction, an impulse, what you want to see is the market provide another correction. Possibly, you would like to see the market correct at least to the 0.32 of the Fibonacci taken on the impulse leg. So in this case, from this low here to this high here. So here on the monthly time frame, we expect the market to provide a nice move to the downside and retrace at least to this 0.32 of the Fibonacci taken on the monthly impulse. Going down on the weekly time frame, what do we have? Now here on the weekly, we can see how the market has just provided a quite nice impulse to the upside inside of the big monthly impulse. Specifically, what we can see is that the market has just stopped exactly at the previous high, creating a double top at this area. Now, there's a quick trick that you can use if you have a situation like this and you don't really know where the structure is. What you can do is you can go down on a line chart. And if you go down on a line chart, what you will see is what you will see all the closes that the market has on the specific time frame on which you are using the line chart. So in this case, since we're using the line chart on the weekly time frame, all the angles that you will see here, these are all closes from a weekly perspective, so strong structure areas. Now what we can see is that the previous resistance, which is now turned support, from a weekly closing perspective is exactly here. So if we switch back to the candles, what we have just noticed is that we have quite strong structure support at this area that this market might easily want to go and test. So this area should be acting as a magnet for the price, and we should see the market reach this zone. Going down on the daily time frame, what do we have? Now here on the daily time frame, price action is extremely interesting. In fact, what we can see is that first of all, the market had provided this quite massive W formation here. When the market was at this area, I made a full breakdown explaining all the reasons for which we expected the market to provide this move to the downside to complete the pattern at the previous resistance turn support. And in fact, that is exactly what the market just did. And by the way, I will link this previous analysis in the description, so you can go and check it out for further reference and more free education. If you have any requests for other breakdowns, make sure that you leave it in the comment below and also make sure you like and subscribe. But at the moment, what do we have? Is a market which is starting to provide a nice M pattern. And when you see the market provide an M pattern, what you want to see after that is for the market to create a move to the upside to go and complete the pattern at the previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, we can see how on the AUD, hedge funds lately have been increasing their net positions. In fact, we went from having minus 10.8k net positions all the way up to having 7.6k net positions, currently running with 57k longs and only 50k shorts. So we went from having more shorts than longs from an institutional perspective with 60k shorts and 50k longs, all the way up to having more longs than shorts, with 57k longs and 50k shorts. So overall, the AUD is starting to get quite strong. And if we go and see what we have on the JPY, we can see how on the JPY, net positions with the last report reached minus 39k, one of the lowest values that we had so far. So we went from having 50k net positions with more longs than shorts. From an institutional perspective, actually quite more longs than shorts, with 63k longs and 13k shorts, all the way down to having a 65k shorts and 26k longs. So the JPY is getting very weak, even weaker, obviously weaker than the AUD, which is actually getting quite strong. And that is the reason for which AUD JPY has been in such a massive uptrend. We already saw this on the monthly time frame. The reason for which we have such a massive uptrend is because hedge funds and the biggest speculators in the market are longing the AUD and shorting the JPY. So obviously AUD JPY is exploding to the upside. So this pair at the moment is quite strong. So if we will actually provide this information, and if we will actually create this information, which by definition is a bullish pattern, we can definitely be looking for a nice longing opportunity with students, at least for a completion at the neckline, and then after the completion, possibly for the market to finally start a correction. But first of all, we want to be looking for a potential longing opportunity. So how we will be approaching that with students? Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we will have to a 4-hour and lower bullish market. And as soon as the market will shift from a bearish to a bullish market, at that point, we will be adding AUD JPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to complete this M pattern at the neckline, which is the previous support now turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education analysis and updates for all of you. You can also comment below and let me know which pairs you would like me to cover in my next videos. Also, make sure you go and check out the mentorship program. It's a very complete program. The link is in the description. First, you get all the rules of my rule-based strategies, and then you trade the strategies with me. Each and every day, you get a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits, as well as having me answering all your questions every single day, including the weekend. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.